Excellency, ladies and gentlemen, I'm a moderator of this evening of this seminar, and I will really believe that we will manage to receive very, very valuable knowledge. And to open this seminar, I would like to invite Ambassador of Canada over in Baltic countries, Mr. Morrison, to open speech.
So I'm very pleased to see you in such great number here at the Riga Business School, an institution with which the Canadian government and Canadian universities have had a very close and important relationship. The room in which we are meeting is Latvia's most modern conference facility, and thanks to the technologies built into the room, we will be able to include a little later in our seminar Canadian experts in Vancouver and Toronto, as well as those in Rome, of course. Today, our experts will be talking about their experience with public-private partnership projects, often referred to as PPPs or P3s. They will share best practices, and they will talk about capacity building. Why is the Canadian experience with PPPs relevant? Since the 1990s, the public-private partnerships have been a useful vehicle in Canada for the delivery of public services and projects in key areas, such as water and waste management, healthcare, hospitals, schools, and transportation. Canadian governments and companies have been involved in over 100 PPPs, both domestically and internationally. Canada is, in fact, regarded as a world leader in this field. In 2009, the Canadian government created a public corporation called PPP Canada as a means to increase the capacity of government to carry out its public services responsibilities. PPP Canada manages a 1.25 billion Canadian dollar fund established by our government. Its mandate is to improve the delivery of public infrastructure by achieving better value, timeliness, and accountability to taxpayers. Now, there are 4 characteristics of good PPP projects. The first one is that cooperation between one or more public partners and one or more private partners to ensure public needs for services or infrastructure. P3s should be designed to provide on-time, on-budget projects which deliver effective infrastructure and services over their useful lives. The second one is that this cooperation should be long-term. This means the project should cover the entire life cycle: design, build, operate, and maintain. This ensures that overall cost and risk is considered. The third characteristic: public and private partners join and use available resources and expertise in the most effective way. Often, the private sector has the experience and the expertise to deliver large projects. They bring innovation and lessons learned from other projects. Many Canadian and international firms have developed significant expertise developing and executing P3s, which can be employed for the benefit of taxpayers. The use of this model has been noted to improve efficiency and innovation. The fourth characteristic: responsibilities and risks are shared between partners and should be properly structured so that private sector risks are not covered by taxpayers. P3 projects require private sector capital to be at risk. The public sector pays only when the infrastructure is available and is performing. This generally means that no payments are made until the infrastructure is built and a substantial portion is paid over the life of the asset if it is properly maintained and performs. This means that taxpayers are not on the financial hook for cost overruns, delays, or any performance issues over the asset's life. So, to sum up, whether constructing new highways, water treatment facilities, or improving public transit, P3 investments help industries and the government to deliver better infrastructure and services to the public. The presentations today will be focused on Canadian best practices. If, after the seminar, you wish to know more, please note that the Canadian Council for PPP's annual conference is scheduled for November 26th and 27th in Toronto. This event is recognized internationally as the world's premier forum on public-private partnerships for senior government and business leaders, and we can provide you with contact information. Finally, I would like to thank the Riga Business School and Mr. Grevinch in particular for letting us use these wonderful premises, as well as Hipoteku Banka for all their support. And we are also grateful to our sponsors, the Law Office of Kronbergs and Trukste and Monte Cristo Coffee. Well, thank you for your attention, and I wish you a good conference.
Your Excellency, Ambassador of Canada to Latvia, Mr. Morrison, ladies and gentlemen, today I'm honored to open together with Ambassador this seminar devoted to the sharing Canadian expertise in attraction of investments to sustainable large infrastructure and public-private partnership projects. I'm convinced that the seminar will give us answers to many significant questions. It is excellent that the seminar will capture a far larger audience than present here, since live streaming of the seminar via internet is available in Estonia, Lithuania, and worldwide. We are aware that the development of Latvia's economic potential requires setting of ambitious growth targets where infrastructure and its quality are of significant importance. Infrastructure is the foundation of economics and human resources development in any territory. As we are talking here not only about construction of new objects, but also fundamental things of functions to be provided by ministries and local governments to its people. I believe that infrastructure and education are two main pillars for sustainable growth and competitiveness for each country. The subject of seminar is especially important today in this post-crisis time. In the crisis in many countries, long-time finance markets had collapsed. If there are not achievements for banks and other finance institutions, long-time liabilities, its effect there's offers on asset side as well. And many good and socially necessary projects will not be financed. Take in account that the risk appetite of the banks, and not only of banks, and risk assessment methods will never be in pre-crisis form. There is clear need to smart, innovative finance solution. How to organize long-term investment for PPP infrastructure. Clever solutions, where we combine different kinds of resources from different kinds of investors, like money from structural funds, money come from local and or central government, initiative of promotional institutes like Europe Investment Bank, money from institutional investors like pension funds, commercial banks, loans, private investments, etc. It's a big challenge to avoid from bureaucracy in finance organization such process if there are so many stakeholders. Special points to discuss about that. At the moment, Canada is among the most active and stable private infrastructure investment markets in the world. And the sovereign rating of Canada is AAA. Since we live in knowledge-based economy, where knowledge is invaluable instrument for development, it's essential that we explore Canadian experience, expertise in drafting of financial strategies for large investment projects. It would be helpful to hear not only about success stories, but also about mistakes. On Latvian national level, it is important as soon as possible to make final decision about creating in country united development institution, where we concentrate experience and resources among them in field, but we are speaking today, opposite to fragmentation that we see today. Currently, Mortgage Bank is being transformed into a national development finance institution, and our goal is to support increasing of states' competitiveness that goes hand in hand with the national development plan's ambition of giving the economy boost. The resources of our bank, Mortgage Bank, enable us to give our expertise on large infrastructure projects and develop solutions for attraction of financing. I sincerely believe that Canadian experience will be useful for Latvia and other Baltic countries in developing and maintaining of efficient regional and national infrastructure. Thank you, Embassy, and all people who care about organization today. I wish you a constructive and creative afternoon. Thank you for attention.
Thank you, Canadian Ambassador and President of Mortgage Bank. And now I think we have time to proceed with presentation. And the first, what I would like to invite right now is Mr. Justin Sharp, Senior Vice President, Integrated Real Estate Solutions, CNC, Lavalin, OM. And just want to mention that Lavalin is one of the leading engineering and construction groups in Canada and a major player in the ownership of infrastructure and in the provision of operation and maintenance services. Mr. Sharp's presentation is about infrastructure development models, operation in progress. Sharp?
Thank you.
Floor is yours.
John. So I'm Justin Sharp. I apologize to people on video. I know it's a face made for the radio, so you can cover your screens and you might do very well. As mentioned, I'm responsible for our buildings portfolio at SNC Lavalin. We have a very large portfolio of about 18 million square meters around the world that we manage. And much of it is conventional, but much of it is also P3 or PPP type portfolios. So I'm here today to talk to you about our experience from a very practical perspective. We're not advisors or consultants or just financiers on P3 projects. We do use our balance sheet both for equity and debt on P3 projects, but we do it because we're an engineering company at heart and an operations company at heart. So really it's about doing the design, doing the construction, doing the operation as well as the financing. So our perspective hopefully is useful to you in the sense of what are the pitfalls and what are the things that we see from each of those perspectives. I'll do just a very brief commercial moment on the company for any of you that aren't familiar with SNC Lavalin Inc. We celebrated our centennial celebration last year, so 101 years and counting. We're hoping very much that the next 100 years is even better than the first 100 years, and all signs would point in that direction. We're actually about 33,000 employees around the world right now. We're operating currently in 100 countries. We have permanent long-term offices in about 40 countries around the world. You see the revenues are for the last fiscal year. Backlog is very important to us. When you say there's 10.7 billion Canadian dollars in backlog, it's the value of future work. So it speaks to the future strength of the operation. So that's the very brief commercial moment. The part of the business that I lead is in our what we call our operations and maintenance business. We're about 4,000 people around the world, and here in the Baltics, we're partnered with Hamburg Valda. Our approach into new markets and new geography is always to find a great local partner, someone that can help us understand the culture of a new environment. We've been here for about a year now with Hamburg Valda, mostly on the building side, but a big reason why we came to the Baltics and set up in each of the 3 Baltic countries was what we see as a future for PPP projects or P3 projects, and we wanted to be on the ground and make sure that we had a solid local footprint in anticipation of these P3 projects. So the model itself, I mean, John spoke of the 3 or 4 key criteria for these things to work. But really, the P3s have many, many moving parts that are attached to them. Whether it be the governance model that the client or the municipality or the federal government is responsible for, whether it's the financing component of it, or whether it's the operations component of it. It looks like it's a bit tough to see on the screen, but really what we're trying to highlight, here I'll do this without poking anyone in the eye, is the role of the government, the role of the public sector on the top right in terms of the governance and the procurement of the model, and I'll talk about some examples that we've seen that have worked and some that haven't worked, to your point, Mr. President, on learning from our mistakes and not just from our successes. The design build component of it, of course, the financing piece, and then the operations and maintenance. And it has to all come together and in a very complicated way, because you're going to find large consortiums of companies that are dealing with these projects. So with so many moving parts, everyone has to understand exactly their role for it to succeed. The role that we play is kind of central to it, because we do finance, we do design, we do construct, we do operate, and we do maintain on these types of projects. So you really see it sitting in the center with a role of integration. So once the project is built, someone still has to deal with Project Co or the concession to make sure it's running properly and to provide not only ongoing services to the project, but making sure that it's meeting the reliability and availability needs, and more on availability later on versus revenue risk models that have created some issues on these projects. Just a quick sample of some projects. This is an Alberta Southeast Stony Trail project, which is basically a ring road around Calgary. We also have a minority interest in the 407 highway, the electronic toll road, which is essentially a ring road around the Greater Toronto area. And it's actually, I believe, the most valuable P3 concession in the world, and a highly successful toll highway system. That's the largest courthouse in North America, the Calgary Courts, that was done on a P3 basis, except at the very end, the financing and the hole went in the ground in 2005 on that project. The province of Alberta at the moment was flush with oil revenues, so the Premier, Ralph Klein, just decided to pay cash for construction. So it's not a pure P3, but it's operated now as a 30-year concession that we're operating and maintaining that site. That's a 120 megawatt thermal power plant that's really runs all the electricity for Pearson International Airport, quite a large airport in Toronto. This one I'm particularly proud of. We just took over last fall. It's the new Symphony Hall in the city of Montreal. There was a 20-year gap without a proper symphony hall in such a culturally dynamic city. It seems odd that there would be such a gap. We were very proud to do all parts of that project ourselves: design, build, finance, operate, and maintain. So if any of you are ever in Montreal, let me know, and I'll get you great tickets to whatever's on at the Symphony Hall that night. This is a unique engineering project, the Okanagan Floating Bridge. This is a courthouse in Waterloo, and this is the largest hospital in Canada. It's still under construction. It'll be another year and a half or so under construction. It's in Montreal. It'll be about 850 beds plus a cancer research facility when it's done. So, we're doing infrastructure projects, roads, rail. We're doing social infrastructure like prisons and courthouses and hospitals, and we're doing pure infrastructure like power generation as well. So lots of good experience. So what are the necessary ingredients to make it a success? I would say first and foremost, it's political consistency. This is not the environment of having a change of colors every time that there is an election. These are long-term commitments and major investments by the private sector and infrastructure. And unless there's certainty that those investments will produce the expected rate of return and the full duration of the period, we won't come. No one will finance projects or build projects if there's any fear that it's a flavor of the day and perhaps the next government will change their minds and do something with the projects. And I'll give you an example. In Ontario, back in about 1998, the government decided to privatize the energy sector. So electricity is all owned by the government, distribution, transmission, generation of electricity, and they've provided subsidized rates for some time. So users, whether it's a household or a factory in Ontario, are actually paying less than the cost to generate the electricity they're using. Government decided to stop doing that. We're going to privatize. A lot of money flowed in, billions and billions of dollars flowed in to create new generation, new distribution, and new transmission. Voters realized that their electricity rates were going to double. Manufacturers realized that their electricity rates were going to triple, and made a hue and cry about this. The government backed down because all they care about is short-term votes, not long-term stability in the electricity or energy infrastructure, and that money was all lost. So, companies, it will not be soon that anyone invests money in energy infrastructure of the province of Ontario, because once bitten, twice shy on these types of things. It needs to have some management of the stakeholders in it. And what I mean by that is when a government decides to build a piece of infrastructure, whether it's a light rail system or a toll road, or a piece of social infrastructure like a hospital or a courthouse, there's many other parties involved. So if you're building a hospital as a P3, you have the medical associations, you have the doctors associations, you have the nurses. All those people have a say. They all have profound opinions of what the physical layout should be and how big their office is. If I'm a judge, I want a bigger office than a doctor. And the beauty of P3s is if that's managed effectively by the government embarking on it, then you're going to get a project that actually gives you what you need and won't be too subject to special interest lobbying for the users of the building. And that, in turn, is what creates on-time, on-budget projects. There's no change orders in a P3. Once you ask for what you're going to get, you'll get what you asked for, and that's it. That's what actually contributes to on-time and on-budget. It's not some secret sauce that the private sector has to build a courthouse or a hospital. It's the fact that there's no change orders. And that needs to be very carefully and patiently managed by the government. The procurement process, some jurisdictions like the United States, for example, every time there's a P3 put out, and they mostly just do roads and bridges in the U.S. They don't do hospitals or courthouses or schools there as P3s. It's always a different package. It's always a different process. It's always a different contract, different risk profile, and it makes it very, very expensive and time-consuming. So, companies like ours will pass on many of those projects because it adds significantly to the cost. And on a mid to large-sized P3, you're talking about millions of dollars in the proposal cost or the bid cost for the consortium that's putting it together. So it's not a decision taken lightly, and if it's not a consistent process, it's not something that will be done at all. And I'll go to Ontario again as a jurisdiction with a best practice now instead of a poor practice like with energy. Is they formed in 2000 an organization called Infrastructure Ontario, and it was the mandate of IO, Infrastructure Ontario, to deliver these P3s. They've done 100 now, projects that are either completed or have been awarded and are under construction. And they have a very good track record of consistent approach to the projects. We know what their lawyers want. We know what their bankers want. We know what their political masters want. So you can churn through a lot of projects very effectively. It's probably the best thing that has been done in Canada for the interest of P3s. And for countries that are embarking on PPP or P3 projects like Latvia or other Baltic countries that are contemplating it, creating that independent government entity to oversee it, in my view, will be the single biggest contributor to success in that process. Because if you leave it in the individual ministries, they'll all want different things. And when the Ministry of Justice wants a prison, they'll go about this in a different way than when the Ministry of Transportation wants a railroad, and it will create a lot of expense and a lot of uncertainty for the private sector to invest in them. The last point on there is to utilize a pre-qualification process. If you ask bidders to bid and it's an open project, as I mentioned before, it's millions of dollars to bid the job. It's best to do a pre-qualification, slim down the field so you're not getting bids from 10 different companies. It'll make it very difficult to evaluate them, and many companies won't play in that field. I'll give you an example. We recently competed a hospital P3 project in Antofagasta, Chile, and we learned only at the end that the client, the government of Chile, had abandoned their pre-qualification. We thought we were pre-qualified with 2 other bidders, so we embarked on the bid. In fact, they allowed 9 other bidders, and we would not have bid that job if we had known that it was so open. 10 different companies that were bidding it. So, slim the herd through a good pre-qualification package and do things in a consistent way. The right deal is really about 2 things. It's about bankability and it's about risk profile. And of course, those things are connected to each other. On risk transfer, sometimes governments are anxious to put all the risk on the private sector. We do need to bear risk on these projects, but there's some things that are outside of your control. So, for example, we recently walked away from a job that was ultimately canceled for our airport rail link. And it was going to be about a 30-kilometer rail link from the International Airport of Toronto to Union Station, which is the main light rail hub and subway hub for the GTA, Greater Toronto area. The problem was they wanted us to do a 50-year concession on it, and it was all fare box risk. So you build the rail system, you operate the rail system for 50 years, and whatever you can get out of the fare box is the way you pay yourself. However, the government is going to mandate how much you're allowed to charge. It's not bankable. No lenders would support that project. So it wasn't just that we walked away from it. The project isn't being done. The government would not change their mind about that. I mean, 50 years of revenue risk. Who knows? Hopefully we won't even use airports in 50 years. I'm really waiting for the day when we have transporters. But, that's an example of a risk transfer that doesn't make sense. There's a famous project outside Chicago in the U.S. that was a toll road highway that was built about 200 kilometers long. The government built it, but then they sold it. So similar to what was done with the Highway 407 in Toronto. However, they sold it with full toll revenue risk. There's no kind of availability payment just for making sure that the road is available. And Macquarie purchased it, a large Australian financing firm, and they have a 30-year concession. They're losing something like $100 million a year on that project. It's just not sustainable, partly because of timing, but mostly because of traffic. If they had done their traffic studies, they overpaid, sure, but don't put the risk there. The most successful projects are one where there is availability risk. So if you're the builder, if you're the operator, make sure the thing works, right? So we have a light rail system in Vancouver, from the international airport to downtown Vancouver. Our pay is based on making sure it's always up and running. So we've been operating for 3 years now, and we're at 99.999 or 59 availability. That's what they're paying us for, not for what we can collect out of the fare box, because in that case the government wants to subsidize mass transit to encourage people to get off the roads, right? So it's not a bankable job on revenue, but it is on availability. The flow down of principal conditions is important because there's going to be a contract between the government and what I'll call Project Co, the concessionaire that is ultimately a consortium, but is the concessionaire that owns the project. And that Project Co is going to have flow-down contracts with constructors, probably lenders, and also with operators and maintainers. Even when it's in the same company, we do those flow-down agreements. And it's very important for the clients and the governments to see that all the requirements or obligations of Project Co flow down to the operators and to the constructors. The reason that's important is where we've seen that not be the case, where risk and upside are kept at Project Co, it tends to be a signal that Project Co is going to sell the concession in the short term. So, it's really just a red flag that says they're probably going to build this thing. They might even sell it before construction is finished, and you're not sure what you're going to be dealing with in a long time. So it's important that all those entities are tightly tied together. With respect to the net present value evaluations, currently that's 99% of projects. That's how it's done. They'll evaluate the total cost of ownership, but on an NPV basis. And, in theory, that makes a lot of sense. In practice, though, what it drives is the cheapest possible construction. And cheapest isn't always best value. So when you're doing a net present value on a hospital, it's going to be about 50% of the cost over 30 years is the construction cost, and about 50% is the capital life cycle and operations cost for that 30 years, about 50-50. But NPV analysis rewards you for cutting corners on construction. We all know that when you cut corners on construction, ultimately you're going to pay for that. So we're encouraging governments more and more now to think of using net present value, but also absolute dollar evaluation, so that they don't encourage getting a bad product. And then I guess the last bullet on there is really around clear specs. I mean, we all price things as efficiently as possible to win the business. You need to provide very clear output specification for what's required. And if that's done well, just as I said, managing all the stakeholders is important early in the process. You're going to have no change orders, you're going to have a good product, and you'll get good quality at the end of it. I think I mean, it's not written on this slide. The true best benefit of doing P3s is that governments don't have money, right? You know, we talk about all the advantages of on time, on budget, and, you know, reduced total costs, and et cetera, et cetera. And I'll touch on a few of those points on the screen in a moment. There's no money. And, you know, it's becoming much more expensive for government to raise money than it has been in the past. And there is just a ridiculous amount of private equity rumbling around in the system out there looking for somewhere to go. And a toll road or a hospital or a courthouse are very attractive places to park that money. If you look at the United States, for example, they haven't done many P3s. In fact, in most states, they don't have the legislative framework in place to allow them to do such off-balance sheet types of transactions. So it'll be years before they can even get that framework in place. Their deferred maintenance liability on bridges alone it's a ridiculous number. I'll get it wrong by 3 zeros, but it's something like a 4 with 11 zeros behind it. All their road system and interstate system was built after the Second World War with a military design, right? It was really designed to allow troops to move very efficiently. That's what the interstate system is based on. All those bridges need to be replaced, all of them. In any given state, there'll be 10,000 bridges that need to be replaced. And there's no money. So it has to be done as a P3. Otherwise, it's not going to happen. So, I mean, that's really the biggest reason. We talked earlier about on time, on budget. I mean, that's been the history. If you look at the P3s in Canada, there hasn't been one that was significantly behind time. And frankly, on budget, no one really knows the truth because the consortiums all keep their own numbers for themselves. But the public sector, it's moot. You pay what you agreed to pay up front, and if they overspent in Project Co, then that's their problem. It's not the public sector's problem. On capital replenishment, that's also important because very often governments will build something, a road, a hospital, a prison, a courthouse, a school, whatever it is, but they'll lose money. They're always fighting for money to maintain it and to do the life cycle maintenance on it. And, you know, all governments have deferred maintenance liabilities that are way beyond their means to pay. And what happens is they can only fund 10% of what they need to do every year. So in a hospital system, what that means is the boilers aren't replaced when they should be replaced. The power systems aren't upgraded as they should be upgraded. It's important that the power systems work in an operating theater. It's really important that those systems work. But if they're fighting for the money all the time, something has to give. And in a P3 model, of course, the life cycle and capital replacement is included in the overall cost, and it needs to be done. So after the term, 30, 50, 100 years, whatever it is, the public will get back a building that is still have many years of functioning left in it because all those components have been replaced and invested in over time. You also have very clear holdback requirements and handback requirements, rather, so that, you know, the government does get back a useful asset. You can't just suck the life out of the thing over the 30 years and then hand it back on the verge of collapse. And the last point is, again, there's no more scope creep, because once the judges have signed off on the design that's going to be awarded, or once the doctors have signed off on the design, or whatever the stakeholder group is, that's it. That's what's going to be built, and that's what's going to be operated. So you're not fighting nickel and dime change orders all the time. So that's kind of the high level version, I guess, of our experience. I don't know, do we have time for questions? If there's any questions, comments, cries of anguish.
Yes. Right now we have the time of questions. Are there any comments from audience? Or I will ask. I think that in the latter case, we have questions regarding ownership of assets. You mentioned about concessions agreement and partnership procurement. What about this ownership? Who is owner?
So the owner is, I'll call it the concessionaire or project co. So if it was our company, for example, that built a prison, we would own it, but with the agreement that after whatever the term of the contract was, ownership would be transferred back to the public sector or back to the government.
But it means that prison, it's a concession contract or procurement contract, partnership procurement based on availability payments. There in latter we have difference. In concession we have toll road principle, and in partnership procurement we have availability payment. And I don't know.
You can do either way. It can be done either way. My experience has been it's better to do it on availability basis because, like in a hospital, for example, who knows what the availability or what the revenue is going to be like. Hopefully, fewer people get sick over time rather than more. So you don't want to drive any negative behavior. You want it to make sure the hospital is functional and operating. Even on roads, we operate roads where, for political reasons, there's no toll. Because the government doesn't want to impose a toll on the users, and it's make sure that the snow is shoveled and the deer are scraped off it, and pure availability.
Yes.
Oh, that's the first button. This one. Okay, I'm talking to here. Yeah, got it. Okay. In these type of projects with a very long-term operation, obviously the financing cost of capital is crucial to the viability of the whole project. Does Canada as a state use their AAA status to get cheaper funds for whatever project being implemented by a private sector party?
So the answer is yes and no. That's my favorite answer to questions. Indirectly. So, in fact, Canada does not sponsor P3 projects. Provinces, so Ontario, for example, or the McGill University Hospital is an entity, but Canada backstops them. So when we do a P3 with for Ontario or for this hospital, because Canada's behind it, the covenant is a AAA covenant. So when we go to the bond markets, when we go to the equity markets, they understand that that's behind there, and that does have an impact on the cost of money. No one can borrow money as cheaply as the government of Canada because they fortunately have a very solid balance sheet at the moment. So there is a higher cost of capital, but the delta's not as big as it would be if there was a weaker covenant. So, for example, there's a project contemplated in Lithuania right now for a street lighting program that's meant to be done on a PPP basis. The covenant of the city of Vilnius is not good. So there will be a big spread between, what their cost of money is and what our cost of money would be. In fact, they might have difficulty attracting investors on that because of the covenant. So it's indirect, the way it influences the capital yield.
You considered for the Baltics a condition that has to be met in order to do such projects?
I wouldn't have any problem dealing with any of the federal governments in the Baltics. Okay. Some of the cities are not in good shape in terms of what their balance sheets look like. But with the backstop of the federal governments, we would not have an issue. It's enviable, the credit rating of the Baltic states compared to some of their larger and more southern neighbors.
So that would mean if a municipality would like to do something like this, then they would have to be backstopped by the Ministry of Finance.
I would suggest that it's almost a certainty that they would have to. One is, how are you going to attract the money? And two is, don't do it if the covenant is so weak that the cost of money is so high, it doesn't make sense to do it. So they might not even attract bidders, and even if they did, it would be a high cost of money.
Yes, please.
Well, what's the minimum return on investment that you would look for in a PPP project?
Are you with the government?
No, we're actually looking at a PPP project.
Well, the official line is 15% as an IRR. We've gone lower than that on big projects. The market would go even to sub 10 if the project was big enough. By that I mean, you know, $4, $5, $8 billion.
So if you have a project that's somewhere in about the €100 million range, what do you think would be reasonable there?
You're probably talking about 12 to 15. Yeah. And there's not a lot of give in between different consortiums on what those rates are. It is an important point that you raised. So there's a certain size at which P3s become much better and much more bankable. Very small projects are going to have a difficult time attracting international funds. The government of Ontario is, and we typically don't look at them unless they're about $500 million or more. The government of Ontario is contemplating moving to their next phase of P3s, which is going to be not greenfields, it's going to be rehab on existing buildings. So they're going to empty out buildings and then do a P3 where you take on the deferred maintenance liability. You rehab, do the whole midlife refit of the building, and then you start fresh as a P3. They're thinking of going down as low as $30 million per project. What we, as an industry, not just we as a company, have been advising them is, if you're going to do that, bundle a handful of them together, so it's at least over $100 million.
Yes, I see another question.
I made different type of projects for roads, for hospitals, for different type of infrastructure objects, like different ones, almost all of them. Can you comment, like, what would be the risks and difficulties in terms? Is there any difference between these projects, or for you it's basically the same? You just come and do it, or is there differences?
Yeah. So if anyone didn't hear, the question is there a difference in the risk profile between types of projects, hospitals, schools? Yeah. They are different types of risks that you encounter. I'm not sure it's a worse or better risk profile. So, for example, with a hospital, the risk is really around, are we going to have the right care of the equipment to make sure the operating theater always works? And that's a pretty controllable risk. Most projects resist the temptation to put energy cost risk into these projects because, you know, frankly, the private sector would build a huge margin of risk in for if we had to take energy consumption risk on it. A highway, the most difficult part on a highway is the risk attached to rehab. So when you're trying to forecast the 30-year cost of asphalt, basically what you're doing is forecasting a 30-year forecast of oil. And if you can find someone that can do that well, then they should be in a different business, and they'll be a lot richer than any of us in the buildings business. So you know that's really the biggest risk on a highway is what's the asphalt rehab going to look like. They're not. I mean, we're not talking about 8, 9, 10 point risk profile on these types of projects. You know, you're talking about 2 or 1.5 points typically on one of these projects, because you can nail down most components pretty effectively. And you know, all the ones that I've looked at and that were part of different kinds of risks, but not necessarily a more gruesome risk profile. Does that answer your question?
Another question? Yes.
You mentioned a lot of projects which I believe are successful projects. Are there unsuccessful projects in Canada? And from your experience, what are the main reasons of them not being successful?
Well, you know, Canadians are pretty much perfect, so I'll look at the American negative example. There have been projects that never got off the ground because people didn't trust what that particular government was doing. There's a couple projects in BC when they first started doing them, the BC provincial government, where they put out hospitals, and the consortiums eventually all bailed out, and they couldn't get the project done. They had to do it on a conventional basis. The biggest, I'm not aware of any that have been delivered, you know, really late or thanks very much, or over budget. The best example is that U.S. project where it has the wrong revenue risk attached to it, plus Macquarie overpaid for it. But no, you have a company that's going to lose $100 million a year for the next 30 years. I'm pretty sure they're not going to invest a lot in rehab on that highway and in fixing the bridges and in doing the repaving. Maybe another example in Canada is what I talked about earlier, the Taro project, Toronto Airport Rail Link. where the project just didn't get delivered because the government insisted on a model that was not bankable. And that actually that was run by a government entity called Metrolinx, which is owned by the provincial government. It's a government entity, but not Infrastructure Ontario, which is with all the experience in doing P3s, that's Infrastructure Ontario. So if Metrolinx had worked with IO, they probably would have changed their approach to that project rather than just being so stubborn that ultimately now there's no airport rail link. And, Toronto is the third largest city in North America. It's a major financial center of the Western world, and probably the only one that doesn't have a decent transportation link between the downtown core and the international airport. It's embarrassing. That's a couple examples.
Another question?
Answering the first question, you said that that the Canadian government backs the projects. Do you mean by that? Do you mean with that like the official?
I'll repeat the question. It's okay. Keep going.
Okay. Do you mean by that backing? Is that an official sovereign guarantee, or it's backed in another way? Because
it's indirect. It's informal. It's we because of maturity.
A matter of trust.
Yes. Yeah. I mean, we're comfortable with the government as an institution. It's a very stable institution, the Canadian government, regardless of which political party happens to be on the top of the heap at any given moment. The bureaucracy is very stable. And we do things with the government of Canada that we wouldn't do with any other client. And so it's an implied covenant, maybe is the way to say it.
Yeah, because with the PPP projects, I think it's very interesting that they are public service projects.
Yeah.
And if something happens, then actually government or municipality is quite responsible that the service is terminated, and actually it's responsible anyway. And
yeah.
So about sharing the risks, I think in PPP projects mostly sovereign side takes the risk.
Well, we're very comfortable that if we're running a hospital and the hospital association, like in McGill or in Restigouche, they run out of money, or we're pretty sure that at some level of government, maybe not even the most senior level at the federal, at some level of government, someone's going to kick in the money because they can't afford us putting a closed and gone fishing sign on the front door of a hospital, right? So it's fairly comfortable. To bring that to new markets, it just takes a bit of time. So that's not going to happen the first time a product is done in Latvia, and it won't happen the fourth time a product is done in Latvia. But after there's a handful of successful projects, the market will more and more price that implied covenant into the cost of money.
Yes, this last question.
Oh, you had two.
Yeah. Speaking one more up on you. Looking at this part of the world where PPP projects are typically 20, 30, 40-year type of periods we're looking at, and that's very hard for people from this part of the world to conceive, because the world changes in their experience 3 times in 20 years.
Yeah.
And as you said just before, the consistency of policymaking is paramount. And typically you would have one government would have to initiate it, a second government would maybe sign it or see it starting, and the third government would actually be able to cut the ribbon.
Yeah. And the fourth government would be stuck with the bill.
Yeah, right. So that doesn't make probably the politicians very eager to step into this, because it's a big headache up front and no glory for them. Again, looking at the politically as well as physically in this part of the world, which specific type of PPP do you think would be the most successful types to get started with, which have the least risks in decision making or implementation?
Yeah. Well, if I was in charge of Latvia, and you should all be thankful that I'm not, I would use social infrastructure to start with on this. I would build schools and hospitals. The simplest thing to do is build highways, and we all need highways, and we all need light rail and heavy rail. But people people will recognize you much more for building something that their kids use or that their sick parent uses. If you have a couple successful hospitals and schools, then public appetite is going to be great. I mean, it's like when you drive down the road and there's big signs from the government saying your tax dollars at work or your money at work, and because they're reconstructing the road, and all you know is you're stuck in a traffic jam and it's making your life miserable, right? So yeah, thanks for spending my money to make me take longer for me to get to where I'm going. Social infrastructure is where I would start, and they don't have to be big. I mean, I would do some small ones, get them done, get them turned out. I do understand there's a unique need for prisons in Baltic states because of the compliance with requirements of European Union standards for prisons. If it was me, I would try and resist that until there was some successful projects that would get public support.
Do you see any role for housing?
I don't think I'm competent to comment really on the housing market. I mean, I understand the housing infrastructure issues and all the kind of crumbling state of it, and the difficulties in finding suitable residential that's affordable in the market. There's been some flirtation in the UK and in Australia with public housing as P3 projects. I'm not competent to comment.
I'm sorry, but I have to finish questions. Thank you, Mr. Sharp.
Thank you very much.
And right now, and also I would like to inform that Mr. Sharp will stay on coffee breaks and in the evening, and you will be able to ask any questions. But right now, I would like to invite next speaker, Nicholas Ilif. And I found in company profile that Mr. Ilif is a partner in Rolands London office, and he is a member of firm's energy infrastructure and mining group. His particular expertise is in the field of project finance and real estate finance. Over the last 12 years, Nicholas has been involved in focusing on the very active United Kingdom PP3 project, in which he has closed more than 70 deals. And presentation title is Effective Legal Implementation of PPP Projects. Floor is yours.
Thank you. Thank you. First of all, I was just saying to Mr. Sharp, he's actually used all my slides up, so that's a bit of an annoyance. Yeah, so, as you mentioned, I'm at Gowlings, which is a Canadian law firm in London. I'm an English lawyer based in a Canadian law firm, and my firm, my practice embodies, I suppose, two of the best PPP markets in the world, two of the busiest PPP markets in the world. But there's been a divergence. Britain, which invented everything first, which invented football, parliamentary democracy, rugby, cricket, and so on. We then export all those things to the rest of the world, and they get better than us at them. So is the case with PPP. We claim to have invented PPP. We exported it to Canada, and Canada's now far better than us at procuring PPPs. Well, PPPs, which Canada calls them P3s, so unique in that respect as well. My career in PPP started about 14 years ago, and as was mentioned in the introduction, I've closed about 70 projects, a lot of social infrastructure. So I think some of the questions which you asked, which Mr. Sharp couldn't answer, I might be able to have a crack at afterwards, particularly ones to do with social infrastructure. I've lived through the evolution of PPP from a sort of knuckle-dragging something which isn't recognisably PPP to the very sophisticated Canadian gentleman which it now is. My original brief was to talk about right. Okay, so the question I was asked to answer when I was corresponding was this: legal agreements in many PPP projects are insufficient, overly complex, and fail to provide sufficient security and incentives to investors. Why do private investors choose to invest in PPPs? Well, as far as that question is concerned, I want to agree with the first part, which is that legal agreements in many PPP projects are overly complex. I'm not sure I agree with insufficient. And then I would like to disagree with the second bit, that they fail to provide sufficient security. And then I'd like to say why I think investors, from a legal perspective, continue to invest in PPP projects. In the United Kingdom, over the last few years, there have been, give or take, about 900 PFIs, as we used to call them, or PPP projects, over the last 20 years or so. And most of these have been made in a structure similar to this, which to me isn't. It looks quite complicated, but I'm afraid it's not the whole story. Basically, it's a procuring authority grants a contract to a project company, a special purpose company, which then subcontracts to various subcontractors such as SNC, and obtains funding from banks and sponsors. So it is quite complex in itself, but that is a fairly static diagram of what a PPP project looks like. But then if you actually get a bit more into the dynamic structure, it looks a bit more like this. So I would argue that that is quite complex, because I put in there, in addition to the basic contractual structure, you've also got all of the direct agreements, the advisors agreements, you've got government departments, you've got private finance units, which is a feature of UK project finance. So in that sense, it is quite complex. But the important point I think about PPPs to make is that it's not just it isn't a static arrangement, and as you've been saying with SNC, it's a dynamic arrangement. It's not just a sale of goods and some money transferred for goods having been sold. It's a relationship which I'll mention again is framed in the context of social, environmental, and political and economic outcomes. And it's probable, from what we know, that many of those outcomes and objectives will outlive the original proponents of the projects, and will probably outlive some of the advisors as well. The first diagram misses the complex interrelationship, or possibly over-complex interrelationship, which it needs to exist to give security to the project participants that they'll get paid, or that they'll get their investment return. It's said in relation to one particularly large UK project, and I'll pick up on another point, which was the Tube Lines PPP, which is the underground system in London, that it was so complex that there was nobody in the whole of London who could explain all the contractual relationships. So, strangely enough, that project was cancelled. So I can talk to you from a little bit of my experience about failed contracts. So I think when you were talking, Justin, there was you said there's a critical size, and certainly that's the experience in the UK, that there's a size which in my experience from the late 90s, projects were very small. The first few that I procured were very small, and probably answered the question about, what are the right kind of entry level size PPPs. But then I also think there's a size and complexity of project which is too much. So I think things which involve underground systems and all that and the like are probably too complex for PPPs. But having said all of that, and having said that they're kind of admitted that they're slightly over complex and there are a lot of interrelationships, I think the reason that investors are still attracted to PPP projects is because of this. That there's the complexity masks a fundamental point, which is that you've got to state if the project is performed as it should be, and if it's delivered to plan, the person who's providing the money for the project, which is the procuring authority, as you say, and as we've been talking about, if it's the government or if it's a local authority which is in good financial condition, that income and that income stream is fairly simple. In fact, it goes from the procuring authority to the project company, to the sponsors, and to the bank. So I think it makes it, actually makes it an attractive investment opportunity, but an attractive investment opportunity which needs the complexity which I described before, in order to in order to make it work. But in fact, I think the attraction is precisely those red lines there, which I put, which is that the income stream is stable. It's pretty much going to be in most countries AAA rated kind of income stream. And an interesting point which I've thought about before in relation to Canada, in the UK we get far more worked up about the fact that you don't have recourse to the government, or contractual or legal recourse to the government. And in my discussion with my partners in Canada, they said exactly as Justin has said, which is that no, it's just an informal arrangement, and you trust that the government won't renege on the promises of its departments or so on. So the informal arrangement is something which is peculiar to Canada and not a feature of UK. In the context of Canadian UK PPPs, and I've heard it now from the first two speakers, so I'm going to say it as well. You'll often hear the mantra on time and on budget, and I think that mantra is normally advanced by politicians who are saying, no, we should use PPPs because they're on time and on budget. The flip side of on time and on budget for the private sector is the private sector get a timed and predictable income stream. So I think on time and on budget is certainly used in the UK as a reason for advancing UK PPP projects. And when I've listened to he's now High Commissioner Gordon Campbell speaking about projects in British Columbia, he's precisely gone on about how Canadian projects have all been delivered on time and on budget. I can talk, and I will talk a little bit about why UK projects take twice as long as Canadian projects to procure. I mean, it's not necessarily an on-time, on-budget point, but it's a procurement issue. So, apart from the income stream, what are the features of what legal features do we need to consider and act upon to create and implement an effective PPP projects? Well, first of all, because I'm English, I'll talk about the negative things, which is what are the impediments to successful procurement of projects. Firstly, cost, and again, this has been talked about before. One of the costs is the cost to the private sector, bidding costs, and a lot of that depends on, if you've got issues with bidding costs, it may depend on the procurement process you use. And I certainly read in relation to Latvian PPPs, there's a consideration of using the competitive dialogue, which I was strongly advised against, because we use that in the UK, and it's led to huge bidding costs for unsuccessful bidders. Now, in Canada, and the reason Canada's better than the UK in this sense is that Canada has an honorarium system, which is that unsuccessful bidders get some of their bid costs back, which I think is right. I mean, you shouldn't get all of your bid costs back, because of course bidding shouldn't be risk-free for people entering a competition to provide a contract. So there's that aspect, and Canada seemed to have that right in the honorarium system. In the UK, anecdotally, on the Building Schools for the Future programme, which was cancelled at the start of the new Conservative government, some of the bidders had used, I think, £5 million, which is probably $8 million or so, in bidding costs, and then not won it, and then they'd have to go back to their head office, which was in another country, and explain why they spent so much and hadn't got a project in the end. So, that's a big issue. And also, I think there's the issue for the public sector, because they have to employ advisors as well. So public sector costs are not, are something which would be highlighted. Then the next area is lead times, and this is one area which I've already alluded to, which in Canada have the best kind of announcement to financial close of projects of any country in the world. I think they're about 14 months on average. Australia's about 16 months, and then the UK is about 32 months, so we're twice as long. Lead times, if you've got very long lead times, I even think a 14-month lead time is probably quite long, isn't it? There's a cost involved in that. There's an opportunity cost. there's a deployment of resources costs as well. So, I mean, if you're pursuing an opportunity which is going to take 3 months to come to fruition, even if it's less valuable, it may be better than spending 14 months pursuing an objective which you might not get, which it means your resources are tied up for that period rather than the shorter period. The next one is political uncertainty, and again, this was covered in the previous slides, but I think the UK is perhaps a good example of political certainty being political uncertainty. PPPs in the UK were started under the last Conservative government but one. So you've got the last Conservative government but one, then a long Labour administration, then a Conservative administration. In fact, PFIs in the UK were started as a means of reducing our public sector borrowing requirement in order that we could enter the exchange rate mechanism and become members of the European Monetary Union, which fortunately and skillfully we failed to do. So, however, we reduced our public sector borrowing requirement. So that was the genesis of PFI. Then it was taken over by Labour, who about halfway through their administration said PFI was the only show in town. So it was the only way that infrastructure, social infrastructure and economic infrastructure was going to be procured. And then we went into a Conservative government, which as part of its campaign had said we don't like PFI, and there were a number of newspapers who said we don't like PFI because if you look at the total life costs of a hospital, which costed £1 billion to build, the whole life cost of the project is £3 billion. How can that be? Well, they're of course ignoring the fact that you have to operate and maintain the project for the 30-year concession, as well as you've got your financing costs and other costs as well. So there was a lot of, I'd say, nefarious reporting and very inaccurate reporting about PFI. However, the Conservative government took that on board and used it as part of their campaign. So from having had the certainty for 15 years or more that there was going to be a continuous pipeline of projects, we ended up in a position where we now are in the UK, which is that nobody's sure when PFI will start again, although there's a crying need for new infrastructure, economic, social infrastructure as well. Next one, an impediment, is too many decision makers. And this has been alluded to but not actually discussed yet. In the UK, typically for a project, you'll have the local authority, you'll have a government department behind that and a minister, and then you'll also have a public procurement body, which is normally called a private finance unit, making decisions about it. So you'll get a lot of people. There's a very good book by an American author called Implementation, which describes how each time you put a layer of decision making in, you have this exponential delay. And I think that what Canada has right is that the Infrastructure Ontario, Infrastructure BC, and all those agencies seem to have devolved authority to make decisions, to push projects through. I wrote an article earlier this year about precisely that, and I said in a UK project, in order to get a derogation from the standard form of contract, and we'll come on to standard forms of contract, you typically, or you may need to get approval from Her Majesty's Treasury, Partnerships UK, the individual procuring authority, sponsoring departments, the private finance units, and the project review group. So that's an awful lot of government bodies you have to go through in order to get a decision on a small derogation from a standard form contract. In Canada, they seem to have cracked that and have a sensible way of getting through sensible derogations, because I think standard form is actually a very important thing and a very important way of streamlining project procurement. But to have a slavish adherence to standard form and no way of getting through it is kind of counterproductive. And then we come on to a point which was made very eloquently, which is the question of too many bidders and too few bidders. And the answer to that is designing a procurement system which doesn't mean everybody under the sun is bidding until the last, and you're making sure the specifications of your project are right and you get the right bidders, but not making the bidding process, for example, so expensive that everybody's put off, or having a procurement process which is uncertain and which people feel they can't get their heads around. I'm currently advising a government in Central and Eastern Europe under their PPP law. It's in fact not a PPP, but it's been done under their PPP law, and there's a lot of uncertainty in there, which makes it rather actually unattractive for bidders, even though what they want is to attract particular bidders, and the particular bidders they want to attract have looked at it and thought, well, actually, it's not clear enough. So that balance between too many and too few. I have actually done one project in the UK which went down to a single bidder, which is a bit of a difficulty getting that through government. But you probably want a critical number is probably 2 or 3, or maybe up to 5, but probably 2 or 3 or 4 bidders rather than more or fewer than that. Okay. So, what is a successful model? What are the features of a successful model? The ambassador in his introduction said there were 4 aspects, and I was rather disappointed that I'd only identified 3. First of all is a pipeline. Secondly is procurement, and thirdly is public support. In about 2001, just briefly on these, and I'll go into some more detail. In 2001, the pipeline in the UK seemed to have no end in sight. So there were schools, hospitals, courthouses, prisons, Ministry of Defence accommodation, Ministry of Defence equipment, roads, railways, everything was being procured under PPP, and then it suddenly dried up. So we crave in the UK at the moment a certain pipeline. We know that it's there because there's been a national infrastructure plan. There have been 2 national infrastructure plans, and another one's about to be announced, which says we have all these projects which are to do with critical economic infrastructure, roads, rails, and high-speed broadband, and so on. So we have the pipeline, but do we have the right procurement process? Well, we'll talk about that. And then the next point, and I'll go on to a more detailed slide, is public support. Now, when I sit in the UK and analyse what we've done wrong and analyse what Canada's done right, I think we probably lose on all of these. And going from the bottom, or kind of one from the bottom, central government and politicians, and this really is an important point, and one of your questions you referred to cutting the ribbon, which is for politicians, and it also goes to the point about which are the best projects to start with. And I've been in various kind of lobbying bodies in the UK and said one of the things you need to try to do is depoliticize infrastructure, particularly economic infrastructure, because politicians, understandably, in a kind of self-preservation way, will say, right, if I start this project now, there's a chance that, first of all, it won't be my ministry when it's signed, or worse still, it will be a different colour of administration when the project's signed, and maybe in a different colour again when the ribbon's cut. So I think one of the things that politicians need to do is think about, is how do you depoliticize infrastructure? And that's particularly relevant for economic infrastructure, because roads take a very long time to procure. Rails, and this, I mean, I can speak from the UK, and I'm sure most other countries where you have a planning system, there are a lot of vested interests, which means they won't happen within the life of a parliament. So the other things which politicians need to do, and I think this is in order to take the other stakeholders along, is to define the objective of the project. And I think there are different objectives. So if you're thinking about a school, well, the objective might be just to build new schools, which to my mind isn't a particularly good objective. The objective really should be the outcome, which is that you improve educational outcomes. If you're looking at health projects, well, what should the politicians be saying to the public? They should be saying, well, we're going to improve healthcare, we're going to improve turnaround times for patients, and so on. If it's to do with a road, it should be to do with precisely your point about reducing congestion, reducing pollution, and so on. So I mean, I think the politicians need to design and present PPPs in a way which makes them attractive to the electorate, which takes me on to that point. And the electorate, and this is the tax dollar point, I think, the electorate need to believe in PPP. And what happened in the UK, and I think the complete opposite happened from my analysis in Canada, is that when PFI was introduced, it was introduced by politicians and introduced by civil servants, and it was introduced in a way with the private sector without any consultation with the electorate at all. So automatically the PPP is on the back foot, because they have to justify why they're, according to the trade unions and so on, privatising what has been nationalised for the last 50 years or so. So the electorate need to understand that it's for their benefit, that there's a tax benefit for them, for example, that it's not going to cost them more, and that they're not being done over by the private sector. So I think that's important. Similarly, end users is a slightly different one, because that's the people who attend the hospitals and so on. Okay, fine. I'll whiz through it then. Let me. I think I'm on my last two, effectively my last two slides. So, let me just pick up then on the ones that I think are really important. So, and I think what Canada got right, and they also got this right with the trade unions. And in the UK, we didn't take the trade unions along either. And they thought, well, we're now being put under private sector control rather than public sector control. Our pensions and our working conditions are all going to be changed. In Canada, there were very good consultations with the electorate, with the public, and also the unions were taken along, I think, because Canada's managed to attract investment from a lot of the public sector pension funds, which seems to me to be eminently sensible, that you have an investment by the people who are employed by their pension fund, which gives them money back, so that the money circulates for them. That hasn't happened in the UK. So I think, again, Canada is certainly the envy of the United Kingdom on that front, which is that it's managed to attract pension fund money into the long-term investment in PPP projects. Next, on the question of pipeline, it's critical to have a pipeline, and a certain pipeline of projects, in order to attract investors, because, as all of the speakers have mentioned, PPP projects involve a huge monetary investment by prospective investors, and also involve a lot of effort by advisors, for example, to understand the law, to understand how the projects are going to be procured. So if you haven't got a pipeline and you say, we're going to do one single big project this year, it's not going to attract as many investors, because they won't have the teams, they probably won't have the incentive to make the teams, and they won't necessarily have the understanding. So I think it's critical to long-term skilled investors and advisors that you have a good and a certain pipeline. Then I've talked about depoliticization, which I think is, for projects which are going to last for generations and generations, you say cutting the ribbon that's not the end game of PPP procurement. The end game is better outcomes for your population. Defined and publicly supportable objectives. So again, in the UK, there's a discussion of which is at the bottom, of outputs versus outcome. I mean, often projects are kind of built around an output specification, which is a building. The debate before the financial crisis hit was, can we do contracts based on outcomes? And I'd be interested in your views on that, maybe when we're having an open session, which is, can you make contracts for outcomes rather than outputs? Outputs is, yes, the room is available and so on. And then availability versus use, I think that's been talked about very eloquently already, which is, it has been a debate which I've been involved in as well, not just in roads, but also in leisure, in the leisure sector, where there's a big element of user risk, which was managed in the UK, but managed in a clever way. And also, in fact, we've used it on student accommodation schemes as well, the user risk element. Then finally on procurement, because I know I'm up against it on the clock, reduction in the number of decision makers I've talked about. Authority, very important. What I mean by authority is the kind of authority which Infrastructure Ontario has, which is a clear authority and mandate to take projects which have been politically approved, to take them through to financial close and drive them through, rather than keep having to go back to the decision makers again and again to say, is it okay? Transparency. Canada is number one for transparency on all the measures that I've seen, in terms of they disclose most of their contracts, the process is transparent, the public sector comparators, for example, which you use to see whether a PPP is a better scheme than traditional procurement, are all publicly available, unlike in the UK, where everything seems to be disclosed in a negative way, which is under a Freedom of Information Act request. So transparency is important in an area where Canada has excelled. And then I think connected to that is trust. Transparency means if people can look at a project and examine the documents and the way it's been procured, and in fact there's nothing wrong with it, what's the problem in it being disclosed to the public? I don't understand. And that all links into the final point, which is trust. Does the public, rather than the public sector, does the public trust that PPP is the best way of procuring projects. And again, as I've said, in the UK, it was done a bit in the wrong order. In other words, we didn't get the public on board before we started doing PFIs. Canada got the public on board, had a standard form of contract and so on before the projects started being procured. In the UK, we did it in our traditional unwritten constitution kind of way, which is to say, you know, we've done it and we'll kind of explain it later, which didn't work. So, thank you very much.
Hello? Hello? Are you hear us?
Yes, we can. Can you hear us?
Yes, excellent. Thank you very much. And I know that you have 7 o'clock in the morning, and we have not 7, but 6 o'clock in the afternoon. And thank you very much for joining us. And I'm Andra. I'm moderator of this seminar. I'm working mortgage and land bank with the public investment project in with PPP 3P. I'm very pleased that you agree to share your knowledge with us. And right now, I would like to introduce with Richard Five. And as I know that you are Assistant Deputy Attorney General for the province of British Columbia, and also a valued member of the Canadian Council for Public-Private Partnership Board of Directors, and you have also extensive PPP experience, and you have been involved in a number of British Columbia most significant and award-winning 3P projects. Your presentation title is The Search for Long-Term Financing for Infrastructure Projects. Floor is yours. Thank you.
Thank you very much, and thank you for the opportunity to meet with you and speak to you today. I would have liked to be there in person, but this technology seems to be working well. Today I'd like to talk to you about two aspects of long-term financing. One is just what has been happening in Canada that has caused the market, the appetite for long-term financing for P3 projects to increase. And then I'd like to talk a little bit about Canadian pension funds and what makes them well suited for long-term investing in large infrastructure P3 projects. Following that, I'd like to spend a few minutes just talking about the Canadian Council of Public-Private Partnerships in Canada. So in terms of long-term bond use in Canada, long-dated bonds for P3 projects in Canada are becoming quite common. Okay, so as I was saying, you've got it. So long-term bonds. All right. So through October of 2011, about $4.5 billion, which roughly equivalent in American dollars, was raised through 12 issuances, and they ranged in size from probably 60 million to $770 million Canadian. The volume of projects that are being financed virtually doubled in 2010 and increased by about tenfold over 2009. So you can see that this is a relatively recent phenomenon of using long-term bonds for financing Canadian projects, but it is a growing. So the question is, why does Canadian long-term financing work so well? And I think the concept of an incubator or a strong Canadian market and then allowing the financing to move out of the country is probably the best way to look at this. So there has in Canada been a very strong deal pipeline. There's been very strong political support for public-private partnerships. There's been a lot of infrastructure need in Canada. We have developed both domestically and international investors coming. We've been developing a strong domestic investor base, institutional investor base. I've given you some examples of some of the participants in global infrastructure direct investing, such as Borealis, Canadian Pension Plan Investment Board, which I will talk about Moderator, and Ontario Teachers Pension Plan. In Canada, fairly recently, and it's been characterized, I think, in The Economist as a Canadian innovation, there was an approach which allows the owner of the project to actually cover the credit spread risk between the time of bid and financial close, which takes the risk of credit spread movement out of the bidders and allows long-term investors to actually participate in the market. In addition, the use of short-term paper in terms of bonds maturing over about a 4-year period, which was primarily developed as a direct response to the 2008 financial crisis, allows some protection of, or some management of risk during the construction period. And this approach has been particularly attractive to some of the newcomers to the P3 investing market, particularly pension funds. Moving to the next slide. Keeping with the incubator theme, Canadian projects have generally been well structured in terms of the way the deals have been put together, balancing the risk, and that has led to consistently high ratings by the rating agencies. The benefit of that has been to allow tight long-term bond pricing, and you can see successful structuring equals higher or better ratings, which results in much better pricing. So, for example, a lot of the projects are rated A-. They're able to get 2 to 225 basis points over the benchmark treasury rate. And that has helped a lot. Same thing with short-term bonds in the mid 100 basis points, and long-term even. And even the long-term BBB rated projects with a slight premium 100 basis points over A-. So looking at sort of 3 to 325 basis points over benchmark. There has been very strong competition among advisors and bond underwriters in Canada, with the result that virtually every significant Canadian financial institution has a team that specializes in bond structuring and sales, as well as the usual credit analysis team. So that development of that specialty, of course, has led to interest in taking that expertise afield, looking for other opportunities to invest internationally as well. If you move to the next slide, I'd like to just spend a few minutes talking as well about Canadian pension funds. And I thought that it was worth just noting the quote from McKinsey that there are few industries globally where Canadians dominate. And of course, in Canada, we live under that shadow. But the observation is that pension funds are one of the areas where Canadians dominate. And that recognition by a major consultancy, of course, is quite significant. So if we can go to the next slide, we'll talk a little bit about why it is that pension funds are unique in the market and why they are worth considering. And there are 4 areas that I wanted to touch on. And these are areas that were identified by the director, or the CEO, sorry, of Canada Pension Plan Investment Board in a recent presentation, and I think they're worth talking about. So the first is the scale of Canadian pension funds. Second is the governance structure that they use. The third is their internal capabilities. And then the fourth is the factors that have affected the investment horizon that they're looking at. So if we go to the next slide, we can talk for a moment about scale. And talking about, for example, the Canada Pension Plan Fund, it has about $162 billion of assets. Those are Canadian dollars, but again, equivalent to US dollars. Under management. So $162 billion of assets under management. It's the largest pension plan fund in Canada. But all Canadian pension plans have significant asset pools along that scale. And just for comparison, if you look at the UK, they have over 100 individual council plans with average assets under management in the order of about £1.5 billion, so much smaller. Similarly, Australia, their superannuation system has almost 150 relatively small funds, And even Hong Kong, the Provident Fund system, has 40 schemes with almost 450 underlying funds. So you have in Canada a very consolidated pension fund market, whereas in other countries you see a much more fragmented pension fund market. And of course that consolidation leads to much more investment strength and the ability to look at much larger projects and take on that scale. So if we can move to the next slide. So on governance, another significant factor in Canada is that the pension funds have been structured with a professional investment board of directors. Each of the pension funds draws a board of directors which is based on the experience and the capabilities of people. They're usually people who have been in the investment industry for a considerable period of time. Their mandate is to guide and oversee the investments. They are not political appointees, and their role is to ensure that the funds operate without any political involvement or influence. So their focus is on generating real significant returns for the funds, and their accountability is based on their ability to do that. So if we go to the next slide, we'll talk for a moment about so the other approach that Canadian pension funds have taken is the decision to use large internal professional teams as opposed to private money managers. And so most of the large pension funds will have teams that they'll have an infrastructure team, they'll have an equity team, they'll have a bond team, and so on. Those teams develop the same expertise that money managers outside of the pension funds would develop. Those allow the pension funds to get directly involved in direct investing programs, and to move to a number of direct public market strategies as well as being involved in private market programs. So they are investing as any large equity fund would do. They are investing as a private equity firm would do, but they experience a significant cost benefit by avoiding external management fees, which in some cases have been 10 times greater than the same equivalent management based on internal costs. And in doing that, they also develop a team which is familiar with the investment needs of the organization. So those capabilities developed internally help significantly in allowing the fund to make decisions on a long-term basis. If we go to the next slide, the next point is just in terms of investment horizon. And in terms of investment horizon, another factor in Canada is that there have been a number of what we call defined benefit pension plans. And defined benefit pension plans stipulate the amount of income that an individual will earn after working for a number of years, contrasted with defined contribution plans in which the pension plan is based on what the plan earns over time. So under a defined benefit plan, there's more pressure to develop. So with a defined benefit plan, there's more pressure to actually take a long-term view because the long-term liability is there. It's based on the number of people in the plan and what their pension expectations are. Because of the long-term view, pension funds are able to take a long-term investment plan, capture liquidity, and take long-term and look for the long-term value premium. An example that I'm familiar with in British Columbia recently, it's not an infrastructure example, but I think it shows the point, is the recent investment by a number of pension funds in a forestry company in Canada. The forestry company operating on its own was under a lot of pressure to generate cash to cover its debt. The effect was that the forestry company was finding that it was actually liquidating its assets, its timber, before maturity in order to generate cash to manage its debts. When that same company was purchased by pension funds, they looked at it and said, we have no pressure to generate the cash. We can leave those trees grow for as long as we want them to, and we can watch the value, because of course every forestry company was under the same pressure. They were all selling into a depressed market, whereas the pension fund can let the company wait and let the trees grow, and then over time, when the market is strong, they can have a much more logical harvesting plan. So there's an ability to take a long-term view that isn't present for. So if we go to the next slide, I just put up an indication of the 15 largest infrastructure investors, just to show where Canadian pension funds fit in the overall scheme. So you can see that Canada Pension Plan Investment Board ranks as 4th globally in terms of infrastructure investors. Ontario Teachers Pension Plan rates as 7th, and the Ontario Municipal Employees Plan rates 11th. So that gives you an idea of the ranking. If you go to the next slide, just to give you an idea of some of the things that pension funds are buying, they own assets all over the world, whether it ranges from Manhattan real estate to utilities in Chile, international airports, and they have been the participants in 6 of the top 100 leveraged buyouts globally. Collectively, they manage approximately $640 billion of funds, and they are 4 of the largest 40 pension funds in the world are Canadian. If you have a look at the next slide, you can see that just an indication of a sampling of some Canadian pension funds and their 2011 returns, so that you can see that they are actually generating quite significant returns on their investments. The lower one, OMERS, I think wanted to make it clear that although they only generated 3.2% in 2011, they had a 12% return the previous year. So, and then if you go to the next slide, you can just see the top 5 pension fund infrastructure investors. And again, in there, we've got the CPP Investment Board, Ontario, and OMERS. So turning to the next slide, just to sum up, Canadian pension funds have a strong appetite for solid infrastructure projects globally. So I'd like to then go to the next slide and just spend a few minutes talking about the Canadian Council for Public-Private Partnerships. And if you go one slide beyond that, you'll see the mandate of C2P3, which is promoting innovative approaches to infrastructure development and service delivery through public-private partnership. So this gives you an idea of who C2P3 is. It was founded in 1993. It's a non-profit, non-partisan organization sponsored by its members with national representation and international membership. If you go to the next slide, its objective is to promote collaborative partnerships between public sector agencies, departments, and industry, provide education to stakeholders in the community, advocacy for public policy in support of P3s, and to facilitate the adoption of international best practices and to promote the Canadian P3 model and expertise globally. On the next slide, it just talks a little bit about the focus of C2P3 in terms of strategic partnerships, education and training, research, cross-Canada events, and the annual conference. The next slide talks a little bit about, again, some of the things the activities that C2P3 gets involved in, including national awards for innovation and excellence in P3s, case studies, developing next-generation leaders, developing a project database which allows research on various projects that have been taken on in Canada, and conducting an opinion poll. The next slide just shows a couple of the reports that have been produced recently by the Canadian Council. And then the final slide just provides some information about the upcoming conference in Toronto, November 26th and 27th, which has international attendance. And then the final slide gives you an illustration of a few of the projects that have been undertaken in Canada. So I would like to just conclude by thanking you for your interest in public-private partnerships and the Canadian model. I apologize for the technical issues this morning and appreciate your time. I don't know if you've made time for questions, but if you have, I'm happy to answer them.
My question is regarding pension funds allocation in infrastructure. And question is, it always mean PPP, or its pension fund would be allocated in traditional procurement way, or it's only in PPP cases?
I think they'd be interested in both. Their interest is not restricted to PPPs. They are looking for good projects around the world regardless.
Okay, the next question is that if you look about project bonds, it means that project bonds is on stock exchange, or it's private investors selected in unlimited basis.
Generally, they're not on the stock exchange. They're bonds that are on a limited basis.
I really appreciate that you had time for us. And right now, I would like to switch our attention to Larry Blaine. And I just want to introduce our audience with you, and that the Larry Blaine is the chair of the partnership, British Columbia Board of Directors. And prior to his appointment as the chair, Mr. Blaine served as partnership VC president and CEO. Under the Mr. Blaine leadership, partnership VC participated in more than 35 partnership projects with an investment value of 12 billion Canadian dollars. Just I wanted to introduce with your experience and your knowledge. Right now, your presentation title is British Columbia Experience with Public-Private Partnership.
Thank you. I've never been to Latvia. Good morning. I've never been to Latvia. My son was on the Canadian Ultimate team, and they played the World Championships in Latvia a couple of years ago, and he came back and said it was a beautiful country with the most beautiful women in the world, so I presume that that is true.
It's true, really.
I see. So I would like to talk about the Canadian PPP market. So I go to the next slide. And in Canada, the way we look at, I'm on the next slide. Yeah, right. So a public-private partnership is a long-term performance-based contract. And the key to the concession, to the PPP, is that we combine the various aspects of the project, the design, the construction, and looking after the asset for a long period of time, say 30, 40 years, and private financing. That becomes a public-private partnership. The government retains ownership, and the government specifies what it is that they are looking for by way of performance standards. The key principles that drive a PPP, the key principles are that we achieve a cost-effective risk transfer, and by that I mean that the cost of transferring a business risk, like schedule or cost, that the cost of transferring that to a private partner is less than what we expect the outcome to be if we kept that risk. The second principle is that it's all based on pay for performance, that over the 30-year period of the contract, that you only get paid for what you achieve. If you don't meet the standards of the contract, then you don't receive a return on your capital. The third principle is that the competition between private sector bidders leads to innovation. And we've seen some incredible innovations in the projects that we have had in Canada. The objectives is that we run a very strong competition between bidders, and ultimately we achieve value for money. And value for money means that the cost of the project over the life of the project, say 30 years, in terms of present value, the cost is cheaper than if we did it through traditional procurement. Changing slides. A PPP is not privatization. The government is procuring an asset. They're not selling one. So the government controls what the asset is and how it performs. It's not a sale of an asset, and at least in British Columbia, I don't know about Latvia, but public-private partnerships are on the books of the government. In other words, they are the same as debt. on the balance sheet. So it's not about doing infrastructure projects and not having to incur the debt to pay for them. The debt appears on the balance sheet of the government. One of the wrong reasons that politicians around the world go into doing public-private partnerships is that they may be short of room on the balance sheet, and so they think they can do a public-private partnership and that it will be off balance sheet. But at least here in Canada, they are not off balance sheet. They are relevant to the credit rating of the government. So how does a PPP generate value for money? And earlier I said that value for money was basically a cheaper. How does a PPP generate value for money? And value for money is just our expression for the PPP is cheaper over the life of the project, 30, 40 years, than if they did a traditional procurement. And this is a list of how it generates value for money. One of the key reasons is innovation. We have seen amazing innovations in our bidding. One of the best examples is that currently in Vancouver, we are building the widest bridge in the world. It's 10 lanes wide. We're building a bridge in Vancouver, which is the widest bridge in the world, and it's a $3.3 billion project. And the government thought that there is a bridge there today, which is 5 lanes wide, and the government needed infrastructure that would have 10 lanes, and so we started a process to get a second bridge. And what we asked for was overall ability to move 10 lanes of traffic. And the winning bidder said it's cheaper for us to build a 10-lane bridge and tear down the old bridge than it is to build a second bridge. It was an extraordinary innovation. And so now we will build it. The concessionaire will build a 10-lane bridge, and then when they're finished, they will tear down the old 5-lane bridge because it's cheaper to look after the new bridge than it is to rehabilitate the old bridge. It's an innovation that government never considered. Secondly, the infrastructure asset is it's managed over its life on a life cycle basis. So typically in government, there's separate budgets for capital projects and for operating expenses. But with the PPP, these things are integrated, and so you get one budget, and it makes for an overall cheaper asset management because the private sector will optimize between private. Third thing is that a PPP has private financing for a portion of the total capital. Equity capital, debt capital, and this private capital, North American expression would be skin in the game, meaning that the concessionaire has capital exposed to performance. So if they perform well over the life of the contract, they get a return on their capital. If they don't perform, they don't get a return. As a result, for example, they don't get a return until the project is complete. And most of our projects come in ahead of schedule because of the incentive to start to earn a return on capital. Fourth thing is integration. The integration benefits, if you design a project and then you have to build it as well, and then you have to look after it, there's efficiencies by having to manage the whole process rather than go from one step to the next step to the next step. The next thing is planning discipline. In order to create a request for qualifications and a request for proposals in a PPP, you really have to think through the project. And so there's a lot of extra planning that goes into a PPP, which may slow down the procurement process, but the overall project length is shorter because you've done all this planning. The next thing is risk transfer. that the private sector will manage risks more cheaply than if you were the government, if you keep the risk and pay for the problem. For example, if there's a risk in the design of a project, if it's not going to work properly for the government, it costs a lot of money to fix that problem. The private sector, if they take that risk, they will be better able than the government to make sure that that design problem doesn't happen. You get very big benefits from cost-effective risk transfer, two of which are the budget for the project and schedule. So if there's a cost overrun, it's paid for by the concessionaire, to the overall process, which I think I've already touched on this, but you can see that there's more planning up front with a concept plan and doing a detailed business case. And then you start a process of selecting a proponent. So you do about maybe 20% of the design in order to issue the RFP so that you can describe what the project is. So once the request for proposals has been issued, then all of the respondents, and if we have 6 or 7 or 8 people proponents who bid to the request for qualifications, we would pick 3 and issue an RFP, and they would start to do some design work in order to respond to the RFP, and then we would pick a preferred proponent out of the 3 that we issued the RFP to. And once we've designated a preferred proponent, they would start the design right away. So you can see that while we're concluding the contract negotiations with the concessionaire, that concessionaire is doing the design work. So it becomes very accelerated. And they even start construction before they finish the design. In a traditional process, all of these different steps are linear. They're in a line. They don't overlap. Whereas in a PPP, they all overlap. And so when you actually start construction, you have the overall length of this process is shorter than if you did a traditional procurement. In fact, in Canada, we are now running processes, RFQ plus RFP, that are in the order of 12 months. And common practice with major projects with infrastructure is that the projects can take years and years because of starts and stops and starts in the process. So, as a rule, Canada doesn't cooperate all that well with itself. This slide shows the different organizations in Canada. So the PPP market has been in existence for about 10 years. Partnerships BC was the first provincial organization to be formed, followed by Infrastructure Ontario and Infrastructure Quebec. These organizations, in Canada, the infrastructure projects are done at the provincial level, and there's 10 provinces, and so 5 of the 10 provinces have organizations which are focused on implementing PPP. The federal government, the Canadian government, has an organization called PPP Canada, and PPP Canada is an umbrella organization which provides incentive funding for municipal governments and provincial governments to put forward PPP proposals. The interesting thing about the Canadian market is that Infrastructure Ontario and Infrastructure Quebec and Partnerships BC are independent organizations that are owned by provincial governments. They're not part of the bureaucracy, but they are corporations which are owned by the government. And secondly, they are cross sectors. They work in various sectors, not just transportation or health sector, but they learn from various sectors and they apply policy across various sectors. This is very important, and it's a very positive aspect of the Canadian market is that these organizations work across all the various sectors of the economy. That one, yes.
The title of
yes, that's right. Thank you. Yes, yes. This slide shows the growth. The Canadian market has grown over the last 10 years, and it's about at its mature level. You know, the number of projects that various governments can undertake at one time depends upon the growth of the economy. All the Canadian provinces and the federal government have very high credit ratings, and the province of British Columbia, for example, is AAA. And to keep that credit rating, they can only have so much debt go on their balance sheet, so that restricts the growth of the market. So the Canadian market is now mature, and I doubt that it will grow anymore. The number of projects will probably not be any greater than it is today, so there's probably more participants in the Canadian market than the number of projects would warrant, but the United States market is starting to grow, and the participants in Canada are including the United States into the overall North American market, and so that makes for a broader opportunity for them. I'm turning to a slide called Impact on the Canadian Economy. So the impact on the Canadian economy has been profound. A lot of new participants have moved to Canada. A lot of international corporations have moved and located in Canada. The Canadian companies have changed their business models so that they can participate in PPP. The local corporations, Canadian corporations, join with the international corporations and bid together as a combined concessionaire. There's probably 30 concessionaires, active bidding concessionaires in Canada now that want to place equity in projects. That's grown from none 10 years ago, and it's transforming the Canadian construction sector. Also, we've grown quite a team of legal and financial and business advisors, technical advisors in all the major cities of Canada. Their law firms and the business advisors like Pricewaterhouse, KPMG, etc., have expanded, and they actually now are also looking outside Canada into the United States market and other markets, which is exactly what happened in the United Kingdom, who developed before Canada, where all these advisors and concessionaires gained experience in the United Kingdom and then looked elsewhere for new opportunities. Also in Canada, we have 5 very large banks, and 10 years ago, the banks in Canada had no interest in participating in PPP. They didn't want to lend more than 5-year maturity, and the Euro banks were in Canada lending at 30 years. So they actually were against PPP. But after the financial crisis in 2008, the Euro banks were no longer lending, especially at that maturity, and the Canadian banks developed an access into the capital markets, where they became intermediaries underwriting the placement of bonds against projects and placing them with pension funds and life insurance companies. Canada has not only large banks, but also very large pension funds and life insurance companies, as Richard was saying. And these pension funds and life insurance companies buy bonds in projects, and that way they get a long-term investment, which is what they're looking for to match their liabilities. So we have a very deep and effective capital market now in Canada to finance infrastructure. If you go, say, to the United States, they don't have the same financial structure where they have such a nice combination of the requirement for funds and the need to invest. Finally, because each province in Canada is not a large enough market to attract a lot of new market participants for bidding, there was an incentive for all the provinces to work together and create an overall Canadian market. And all of the Canadian provinces have done that. And it's not usual for us to work together like that. We usually compete. But we have a pan-Canadian, cross-Canada approach. When you think about the United States market, and 50 states, they have the same problem but larger, where they're going to need the various states to work together to create an overall United States market. Australia has been very successful at creating an overall national market, as has Canada. And there has to be a large enough market to create a competitive bidding market. So I'm now going to, after PPP agency in British Columbia, to the Partnerships BC model. Something I love to talk about. What makes for a successful PPP initiative? First of all, you have to have strong political support. The head of the government has to make speeches and has to say that he or she supports public-private partnerships, and that when you start a process for a project, you aim to finish it. It's so important to the bidders that they know that the government is going to follow through and not stop in the middle. Second thing you need is a policy framework so that the bureaucrats have discipline with the process. In British Columbia, in Ontario, in Quebec, federal government have a policy that says that projects over a certain size, typically $50 million Canadian, the projects over a certain size will examine a public-private partnership. So the bureaucrats and the government then know that to get the project approved, they have to do the right paperwork. They have to do a business. And the third thing that you need, based on the Canadian experience, is you need an organization, as I mentioned earlier, that is the focus for implementing PPP and which learns from one project and applies it in the next project, whether it's in one sector or another sector. So an organization, there can be various ways of doing it, but one way is the way we do it. And our model is that we focus on developing best practices on an ongoing basis, so the participants in the market that bid to projects, they know from one deal to the next what the process will be, and they know what the terms of the agreement will be. They don't have to educate the client every time. It's the same client for each project, and that's the way it's done in Alberta, the province of Canada, and in Quebec, and in Ontario, and in New Brunswick. And at the federal level, is that it's one project, one organization which is doing the procurement of every project. So far in British Columbia, I've moved to the next slide. Projects in BC. You can see the different sectors that we work in. Initially, it was transportation, highways, bridges, and healthcare. We have completed our first correctional facility. We are now involved in our first wastewater treatment project, social housing projects. We are currently working on a very large hydroelectric powerhouse facility. So we have a wide range of projects, and all of these projects and all of these sectors are done in the same way, by Partnerships BC, with the same kind of documentation, of course different for different sectors, but still many things in common. So this is, these are pictures of projects, and as I said, initially in Canada we have medical coverage provided by government, so that clinical care is paid for by government, but the building in which clinical care is provided, a hospital, long-term care facility, these can be provided on a concession agreement with the private sector. So the way in which clinical care and the building and its maintenance are integrated creates great efficiencies and lower costs of both the building and the clinical care if the design is done properly. That's something that we've learned a lot about in Canada over the last decade. Roads and rapid transit, some pictures. My point, we have highway projects that are not toll projects, or bridge projects that are not toll projects and are PPPs. We have highway and bridge projects that are toll projects, and they're still not PPPs because the government retains the toll risk. And we have highway and bridge projects that are toll projects that are full concessions, PPP projects. And you can have any combination of those things, and the different projects, sometimes it makes more sense to transfer the tolls, the revenue risk, and other times it does not. And you can still do a PPP whichever way you go. And I think that concludes my comments.
Very many thanks for your excellent presentation, and I just wonder, and I'm very happy that everyone here about that Canada do a little bit different as Europe do, because Canada not the not issue to implement PPP project is circumvent public accounting rules. It's that you agree that that PPP, if it shows value for money, it's based on private sector innovation, not on some accounting system.
What you just said is so important. It is the most important thing about PPP, is that it's about efficiency and value for money, and not about off-balance sheet treatment.
Yes. And what I also like to hear is that in your presentation, all times I hear that private involvement in such PPP project should be based on how to optimize this service, not to maximize. And,
yes.
And also, I think it's very important that for Latvia we have very strong financial restriction. We can't allow so much investment project as we want, and therefore I believe that we could become more smarter, and we could look on Canadian expertise. And I really believe that my dream is that pension funds should be allocated here in Latvian infrastructure. I also believe that we will manage to solve problems concerning equity financing. And I know that in Canada it's not makes so big problem as in Latvia or other Baltic countries. And therefore I believe that we can't to make fear and being first and try to do something different in country. And therefore I would like to thank you once more, and also thank you about our previous meeting in Vancouver. It was in March when we met. And yes. Then I learned that Canada do also in different ways that, and in your PPP project, if you calculate for value for money reason, that cost and access of finance is cheaper to public sector than in PPP project. The public sector goes with ownership of assets and also with public sector financing. I think it's very, very important if we talk about some innovative financing solution in infrastructure projects. Therefore, many thanks for your expertise. And right now, I would like to ask the audience, do you have any questions? Yes, it's a question from State Treasury.
Hello. Two questions from my side. One is Canadian government debt is around 30% from GDP. Well, does that include all the PPP contracts and liabilities under those contracts? That is question number one. And the second is about risk transfer and how do you see involvement of pension fund resources? Is that good or bad from the risk transfer perspective in the project?
Thank you. The answer to your first question is yes. That all of the obligations under a PPP contract show up as debt on the balance sheet of the government, and even more importantly, the rating agencies, when the rating agencies look at the credits of the provinces, they include all of the PPP obligations as part of the debt of the state, and so they should. The second part of your question about pension funds, what we see in Canada is that the pension funds are very aggressively looking for opportunities, and in many ways they think Canada is too small. You know, a typical PPP project is levered 90% debt, 10% equity. So a $400 million project has only $40 million of equity, and so for the pension fund, that's not a very big investment. They have billions and billions to invest, and so the Canadian pension funds end up looking around the world to find projects that are big enough. So we have no problem attracting pension fund money into the projects. They seek it themselves very, very aggressively. And in fact, I don't know if you're a financial analyst, but there's there's a Sharpe ratio, which is the ratio of the return on an asset divided by the volatility of the return. And the Sharpe ratio for infrastructure investments is the highest of all asset categories, meaning in the world today you get the highest return for the risk you take in the infrastructure sector, and that means that the pension funds, who are the biggest players in the infrastructure, are getting good deals right now, and they will compete that ratio down over time until it becomes the same as other asset categories, because, you know, theory would say that ratios should all be the same, adjusted for risk. And so it's a very healthy environment right now in Canada on the government side, because there's so much capital seeking investment in infrastructure, quality investment in quality infrastructure projects. So we don't think there's anything that needs to be done. They're doing it on their own.
You made a statement about having to have a large enough market for competitive bidding. Can you quantify what a large enough market would be?
Well, British Columbia has 4 million people, and the government's capital spend is about $5 billion Canadian per year, and of that $5 billion, about 25% is in public-private partnerships. So we'll call it $2 billion a year, 1.5 to $2 billion a year, which is about say 3 to 5 projects in any given year. So right now, Partnerships BC has between 7 and 10 projects that are in various stages of procurement, and maybe 3 to 5 are in an active stage of bidding. And Ontario and Quebec are, say, twice the size or 3 times the size of British Columbia. So you can see that, you know, over the whole of Canada, the amount of projects might be in the order of 20, and in the order of $5 to $8 billion per year, and then that's about a minimum. And it's not that large, but it's the important thing is that it's predictable, and so that if you survey the concessionaire bidder community in the U.S. and what the most important thing is about where they want to bid for projects, they will say the most important thing is clarity of government intentions and consistency of deal flow over time. And that's the most important thing. So I guess Canada, which is 40 million people, about 10% the size of the United States, if they have a deal flow of, I don't know, $10 to $15 billion a year, that would be good.
Yes, we haven't any questions right now, and I would like to thank you for your time and for your excellent presentation, and I really believe forward seeing you once more. Thank you.
Nice to see you again. Thank you so much for having me.